Okay, hello everyone. This is Venture Corp's 9-month 2023 Executive Summary and General Comments dated 3rd November 2023. Right, we look at the 9 months 2023 results overview. Revenue has dropped by about 19%. Net profit has dropped by 25%. Net profit margin has dropped to 8.9% versus the same period last year where it was 9.6%. Inventory has dropped by 24% year on year. This is the first piece of good news here. Right, net cash has gone up by 36.5%. Again, a good news. NAV per share has dropped slightly by 0.04 dollars, which is 4 cents. Okay, so we move on to discuss why revenue and earnings per share has dropped so much by double digits. Right, so they say that the 9-month 2023 revenue has declined against a high base last year. So what they're trying to say is that last year they did well. That's why this year the revenue looks like it dropped by so much, right? Due to soft customer demand, right? So this is the part I'm slightly worried about, and ongoing inventory destocking. This means to say they're selling away older stuff, right? Which means that the profit margins are probably lower. Right, so this is what they are saying. You can see that the 9-month results for 2019 was here, right? Then 2020 and 2021 were low. Then it improved in 2022, and they are saying that this high base. That's why when it compared to 2023, it looks like the percentage drop is quite high, right? But I would like to say that I think this is probably due to COVID effect, right? So maybe this part, the results are not that great in that viewpoint. So I would think that if we compare against last year, yes, we can say last year they did well, but overall, it looks like we are returning to the COVID period, right? Which probably implies really that the customer demand is softening. Right, so net cash position has gone up. This is great. Okay, not going to worry too much about this. Right, we look at the balance sheet, all right, it's still strong. You can see the cash balances has gone up, right, even though NAV has dropped. Right, we move on to look at the second part of the balance sheet, which is about receivables. Receivables dropping is a good thing. It means that whatever goods and services that they have sold, right, they are being paid for it, right? Because receivables, amount of money people owe you for your services or goods already sold or rendered. Okay, so when that happens, the receivables are dropping, means that their customers are paying them, right? We don't want to see receivables keep going up. It may mean that their customers delay payment or may be struggling to pay venture. And I think this is, in this period, something we have to look out for because of the high interest rate environment, right? It could be that companies are struggling to pay off the things that they have bought. Right, so we look at working capital. I think there isn't too much to be said. They say they are going to optimize working capital and inventories have dropped by this amount, right, which is a good thing, right, which means they're clearing their inventory. Right, so they will say that the 9 months this year has been characterized by global macroeconomic landscape uncertainties as well as unabated geopolitical tension, right? So softened demand is the big worry that we have, right? You can pause and read here if you want to, right? Disclaimer from venture, right? They may contain forward-looking statements that allude to future operating results and plans, right? They are based on assumptions and there are unknown risks and uncertainties, right? Essentially, is to tell you that you shouldn't base your investment decisions based on anything in this report, right? Because the statements they make are forward-looking and may be subjected to change, right? The same applies to this video. Don't invest off just listening to this video. It's for educational purposes only, right? So I'm going to push on to further look at the annual report just to have a better overview. Right, this annual report is dated 31st December 2022. So this is last year's result, which you heard earlier was good results, right? So this is what the group is actually headquartered in Singapore. Its expertise in domains like life science, genomics, molecular diagnostics, medical devices and equipment, healthcare, luxury lifestyles, and wellness technology, of which I think the last three are, I think, and medical devices as well, are probably the places where I'm optimistic about the future because I think people will more and more invest in these areas, right? Actually, including life science and genomics as well, right? All these things are, I feel like, the technology of the future because people will pay more and more to have a better lifestyle, especially with the aging population and population shrinkage, right? So venture will continue to invest in new tech, right, to be able to offer a wide range of differentiated services, right, and work with his preferred partner of choices, including Fortune 500 companies. So they're trying to say they work with big companies. Right, so this is a statement from the executive chairman. Right, I won't go through the results last year. Right, I'll just have a look at some parts about their dividends. They said that Venture has consistently paid dividends since its listing in 1992. We will endeavor to pay equal, if not higher, dividends each year. 2022 marks the 30th year of our listing in SGX, and we have delivered an impressive total annualized shareholder return of 20.1%. I think this is a very impressive return, which means the company has done well overall based off 2022's results. All right. So yeah, we'll just have a look at what they actually do here, right? So they do liquid chromatography, mass spectrometry, spatial transcriptomics, sorry, not familiar with this, and digital PCR, right? So these equipments are used widely in food and water quality testing. Again, I think there's a good future in this area, right? Research on infectious diseases and improvement of medical drugs, among others, right? And longevity industry, right, which I was alluding to earlier, and why I was interested in this particular company, right? Wearables and robotics. This is related to Apple's Apple Watch, which I think has a lot of health tracking devices, right? So I think in the future, Apple might dominate this industry with the Apple Watch because they can feed all the information from, for example, sleeping patterns, exercise, matrix. I don't know if they can measure things like sugar, blood level as well, right? So these are things that I feel like the future people will care more and more about because of the aging demographics as mentioned earlier. So I think venture in this way, in this area has a good future, right? So financial highlights, I don't think there's too much to say about this, right? I just wanted to have a look at how their revenue is. It mimics what we discussed earlier, so I'm not going to talk too much about this. Yeah, so I'll go to the last slide. All right, so this is a half-yearly comparison, right? I just wanted to have a look at and see whether there's anything interesting to talk about. Right, I did a dividend comparison over the last 5 years, right? So they have gone from 2018, 2019 at 70 cents to 75 cents, all right? And I also place their earning next to their dividends to see their payout ratio, right? So their payout ratio range from something like 54% to 73%, right? So that means to say that for every dollar they earn, in this case 2022, right, they pay out 73 cents as dividends, right? So it looks to me like hopefully the moving forward, the payout ratio looks seems to suggest that the company should be able to maintain its 75 cents dividends. I do not expect dividends to go up given the latest 9 months results, right? But I'm hopeful that Venture can maintain its 75 cents dividend, which gives it a yield of 5.6%, right? Given a price of $13.38 as of today, I just checked, right? And you need to realize this 5.6% will be better than the REIT that gives 5.6% because the REIT has that, whereas Venture does not, right? So it said earlier in the slide that they cleared their bank borrowings, right? So if two companies give you 5.6%, one has debt and one does not, right? The one that does not have debt actually is much better. And moreover, if you look at REITs, right, they generally pay out 90% of their earnings, at least, right, to get their tax exemption, whereas Venture does not pay out 90%, right? The only concern with this stock is it's cyclical in nature, right? That means to say, I don't know if there will be a down cycle for this stock and earnings may fall below 75 cents and they may have problems paying dividend, right? That exists, that's a possibility that exists for this stock, right? With that, I would like to remind you, none of this constitutes financial advice. Please do your due diligence before you invest in any equities, right? Thank you.